Hello guys, welcome to Co Academy, and in this video we'll be talking about the definition of accounting. Remember that accounting is a process. It's not a one-off event, it's a process in which various steps are followed. So accounting is essentially the process of analyzing, recording and summarizing financial data of a business, that is the monetary transactions of a business. Now first of all, we when a transaction happens, for example actual business transactions like sale of goods, provision of services and purchase of assets, these are all financial transactions. That is, these can be measured in monetary terms, that is in dollar, in rupees, they are quantifiable. Now once a transaction is done, for example purchase of an asset, we analyze it as to what sort of transaction is this. For example, purchase of an asset is a purchase of long-term assets which will use over many years, so it's the account will be asset account. Okay, so we analyze this transaction and then we will record it. Of course we will record it as an expense, but we will record it as an asset. Money went out and we bought an asset, so we first analyze the transaction and then we record it, and then we summarize all the transactions recorded in the form of trial balance and then profit and loss account and balance sheet. So it's a process all the way from determining as to whether to record a financial transaction or not, all the way to summarizing the transactions in the form of financial reports. Remember that transactions we record in the books of accounts are supported by certain source documents which are analyzed and are used as a basis to record transactions. For example, if we want to record purchases, we have to have purchase invoices in the backup. We cannot record events in the accounting out of thin air. We have to have some source documents. When we record cash in and cash out, we have to have bank statements. Similarly, when we record sales, we need to have sales invoices with us. Recording electricity expense, we need to have electricity bills. So all the recording is done based on source documents, and things are recorded only after we analyze them, and then ultimately we summarize them in the form of financial statements, so that all the recorded information is useful for people who need to make decisions based on that information. For example, it could be shareholders who want to buy shares and they need to ascertain whether the company is performing good or not. If the company is performing good, then the share prices will go up, so they will decide on the basis of the financial information which was prepared as a result of accounting process. Same goes for banks, government institutions and all those things. So I guess you got a fair idea as to what accounting is and why is accounting called a process. In case you want to get future updates, do subscribe to the channel and also search the various playlists in this channel. Thank you.